Some of you have been really excited about some of the ones we've covered about spreads and talking about some different strategies and systems there. And I know some of you are kind of going back and forth of, well, which ones do I want to do? Do I want to do binaries? Do I want to do spreads? What's best for me? So we're going to talk a little bit about that tonight, review the basics, talk about some pros and cons of each, some different ways to use each, and then I'll show you where you can get some more information about strategies and systems and free education on each one to help you decide what's best for you. So welcome to the Nadex Application and Strategy webinar series. My name is John Skelton. I'm with apexinvesting.com. We do these webinars, these educational webinars for Nadex every Monday night at 7 p.m. Eastern Time. Apex is completely separate from Nadex. Nadex completely separate from Apex. Nadex is an exchange. Apex, we're an online community of traders helping traders and an education company. I'll tell you a little more about us here in just a second. Let's get our disclosures knocked out. Trading futures, options, or any financial instrument involves risk, may not be suitable for every investor. Any trading decision you make is your sole responsibility. Information contained herein is for educational and informational purposes only and is not an offer or a solicitation of an offer to buy or sell any particular financial instrument offered by Nadex. And past performance is not indicative of future results. So speaking of Nadex, if you don't have one already, if you're not very familiar with Nadex, hop on over to nadex.com. You can go through and check out the tabs at the top here, get some more information about the different products that Nadex offers. That's what we're going to be talking about tonight. Nadex basically offers two different type of products. They offer binary options and they offer spreads. Okay, and we're going to cover kind of the basics and how to put those two to use. Right here under the trading tab, the second one down, demo trading platform. If you don't have a demo account with Nadex already, make sure to hop on and get one. Nadex will give you a free demo account. All you got to do is hop in, create a username, fill out some quick info, and hit submit. In just a few moments, you'll get an email from Nadex with a temporary password, and you'll be able to log into your demo account. Nadex will give you a $25,000 demo account. You can hop in, get to know the platform, get familiar with all the different products, entering and exiting orders, and so on. Test out any new strategies or systems. Definitely take advantage of a demo account and practice anything new in your demo account and not with live money. Nadex will give you a free demo account for 2 weeks. Once you fund a live account with Nadex, it's only a minimum of $100 to fund an account with Nadex. All right. Obviously, you can put more than that in there, but only $100 minimum to open an account. Once you place your first live trade, you can give Nadex a call. Doesn't matter if your first live trade was a $2 risk trade or an $82 risk trade, doesn't matter. Just give them a call. After your first trade, they'll extend your demo account out for up to 1 year. Okay, so if you don't have a demo account, hop on right now, even while we're on this webinar, and get that going. Make sure you've got a demo account. From there, hop on over to our website, apexinvesting.com. You can click right here for Join Free Now. This will give you free access to the all the education and free education on our site. Just create a free username and password. What you can do is, once you have that, you can log into the site, and let me just show you a couple things here. Just a ton, literally hundreds of hours of free education for you about trading in general, about ways to trade Nadex binaries, Nadex spreads. You can hop right over here, check out our weekly webinar calendar. Feel free to join us on our upcoming webinars. So, news trading calendar here, we'll let you know about any upcoming news. But right here under the Binary Essentials tab, right here, the third one down, trading system courses. These are all free courses that you can go through, and I'll reference this again later. All kind of good information here about some different ways to trade binaries. And right here under the questions tab, I know I'm going through this a little fast. There's a ton of info on our site. I just want to direct you to the best place to start so you don't get overwhelmed. Right here under trading questions forum, a bunch of information in here about trading mentality, psychology, risk management, bunch of articles. But if you scroll down here in the forum, it's broken down to S2, S3, just kind of section 2, section 3. If you go down here to S10, again, a bunch of information about all our different systems. You can walk through there and watch step-by-step videos and so on. And a little further down right here, watch webinars here. This tab right here, newest webinars, this is where all our most recent webinars are posted. This one I'm doing tonight is being recorded, and I will have it here in this system, or in this section here. a little bit later tonight if you want to catch up on it. Also, you can go back and review any of the last few weeks of webinars that we've done here, okay? But also in that same section, tonight, again, we're going to be talking about binaries and spreads. This is a complete library of education here. See right here, Nadex binary webinars, Nadex spread webinars. Okay, we also have getting started with Nadex, Nadex platform tutorials, everything you would need to know about Nadex and different ways that we trade them, how binaries work, what's the difference of binaries, how spreads work. But you can click on any one of these and you can get all kind of information here. In the money and out of the money strategies, nighttime strategies, 20-minute contracts, bunch of free information about how to trade Nadex, okay? So take advantage of that. Nadex will give you a free demo account. You've got access to a bunch of free education here, so definitely make the most use of that. Also, feel free to hop on over to Facebook.com/Apex Investing. You can follow us and like us there on Facebook. Keep you updated about a bunch of good information, new webinars coming up, new strategies, new systems, trades from our trade room. Easy way to keep up with some new stuff going on there, okay? So take advantage of those two places there, get your free demo and some free education. So again, tonight, what we're going to talk about is binaries or spreads. What's better? What's different? How to use each? Does my schedule determine that? And again, tonight is a Nadex webinar. This is a webinar educating you on binaries and spreads, Nadex products, different ways we trade them, okay? This is not an Apex webinar or webinar on, you know, Apex tools or so on, okay? I see a couple questions there. McGuire and Muck, feel free to ask those questions over on the Apex website and we can help you out with that, okay? So let's jump in. Let's talk about binaries first of all here. We're going to do a quick review and then talk about some different ways to use them. What are binaries? How do they work? How can they be traded? Okay. One of the benefits of trading Nadex binaries is there's no stop outs, there's no whipsaws, and it's limited defined risk. And you know that risk before you ever enter. That is one of the big positive benefits about Nadex, whether you're trading binaries or spreads, that all of their products have capped risk and no margin calls. You cannot lose more than a defined risk, and you know ahead of time before you ever get in the trade exactly what that risk is. Now, one of the big benefits of binaries, and we're going to talk about this tonight, is they're short-term, fast-moving contracts with only two possible outcomes at expiration or settlement. The value of the contract is either worth 0 or 100 at expiration. Okay, it's a binary. It's yes or no, 0 or 1, true or false. The statement either did or did not happen. Okay, and just in a nutshell, what does that mean? What is a binary? Well, if you come over here to the Apex or to the Nadex website, let's just, for example, go to Forex. Let's click the euro dollar, and let's click on one of these here. Okay, all these different strike prices right here are each of these is a binary contract. All right, and what does that mean? Well, you click on this binary contract. It's very simple. It's a statement. The euro dollar will be greater than 1.0569 by 8 p.m. That's it. That's a binary contract. All right. If I say yes, I think the euro dollar will be greater than that. I agree with that statement. Yes, I want to buy it. If I disagree with it and say, no, I think it'll be less than that, then I want to sell it. It's that simple, yes or no. And all these different strike prices here are different binary contracts, okay? You can hold a binary contract till expiration, or you can exit early, all right? And there can be dramatic changes in the value of a binary just even with a small amount of market volatility, because just one tick can make the difference in whether that binary expires in the money or out of the money. And I'm going to show you some examples of that. All right, so even if the market's not moving a lot, you still have a lot of leverage and volatility with the Nadex binary. You've got a potentially high percentage of return on your investment, even with just a very, very small move in the market. Okay, so there's limited risk. The floor of 0 caps your risk of long positions and your profit of a short position. The ceiling of 100 caps the risk of short positions and the profit of a long position. What does that mean? Well, let me show you. Quick example here. Binaries in a nutshell. All right, if we buy one Nadex binary, remember at expiration a binary is either worth 0 or it's worth 100. If we buy a Nadex binary for 25 bucks, all right, and we're buying, that means we're going long. We think the market's going to be up or stay up. So if we buy a binary for $25, our maximum risk is $25. The amount that we put up to enter this trade, the amount we buy the binary for, okay, is our max risk. What's our maximum reward? Well, if we buy this binary for $25 and it expires in the money, the statement expires true, it'll be worth $100. So the maximum reward is $75. Okay? So the amount you buy the binary for is the amount at risk. This amount is the money you're putting up to place the trade. The difference between what you buy the binary for and $100 is the maximum you can make. Okay? Now, let's look at another example. Same example, we're buying, we're going long. If we buy a Nadex binary for $75, our maximum risk is also $75. It's the amount we put up to enter the trade, the amount we buy the binary for. And our maximum reward is going to be $25. It's going to be the difference of where we bought the binary compared to $100. All right? Does that make sense? Any questions on those basics there of buying a binary? Worth either 0 at expiration is worth either 0 or 100. Whatever amount I buy a binary for is my maximum risk. The difference of where I buy and $100 is my max reward. Okay? All right, now let's take a look at the opposite. What if we sell a Nadex binary? Well, it's basically just reversed. If we sell a Nadex binary, if we sell it at $75, okay, we're going short here. That means when we sell, we're going short, saying the market will go down. So if I sell a Nadex binary at $75, my maximum risk is only $25. It's the difference of where I sell compared to $100. Okay? The maximum reward would be $75. So the amount that I sell a binary for is also the maximum amount that I can make. So the difference of where I sell the binary for and $100 is my risk, and the amount that I actually sell it for is my potential reward on the sell side. Now let's look at another example of going short or selling. What if I sell a binary at $50? Okay, because remember over here, remember when we're looking at the different binary, there's different ones available. See all these different contracts? I can buy this one for 8, 10, 20, 39, 57, 77, 90. There's different binaries that I can choose. All right. So depending on which one I choose and where I buy or sell at is going to determine my max risk and my max reward. So for example, if I sold a Nadex binary at $50, then my maximum risk is $50 and my maximum reward is $50. Okay? So there's an example of buying and selling a binary. So just real quick, let's just say, for example, right here, that we were trading the euro dollar and the binary contract we chose was this one right here, stating that the euro dollar would be greater than 1.3960 at 3 p.m. Right here, this side, the right side is what I can buy it for. The left side is what I can sell it for. So let's say, for example, that I chose to buy it for $85. Well, it tells me right here, okay, and that's one of the nice things about the Nadex platform is yes, I need to remember this and I need to learn how this works, but if I forget, if I click this trade right here, okay, and keep in mind, when you're looking at all these different strike prices, this side here, the offer side is what you can buy it for. The bid side is what you can sell it for. So if I were to select this binary contract right here, and I said, yes, I want to buy it, and I want to buy 1, boom, it automatically fills out the bottom here. See that? My max loss is $61. My max profit, $39. Okay, and I know ahead of time exactly what my max risk and my max reward is before I ever place the order. All right, and if I was wanting to sell it instead of buy it, it'll do the same thing. Tell me my max loss and my max reward. So if I'm new and I'm still trying to really understand it and I forget, wait, buying is this way and selling is it, I don't have to worry about not knowing that before I enter a trade because it's always going to be listed for me right there. Okay, before I get into the trade, it'll tell me what my max risk and reward is. All right, so I know if I'm going to buy it for 85 bucks, I know the max I can make is $15 because the difference of 85 to 100 is $15. My max loss, 85. All right, so I know exactly what that is before entering. Okay, and kind of a way to look at this is what we call the midpoint. All right, see this, $85 on the buy side, $79 on the sell side. So if I was to take 85 plus 79, that equals 164. I divide it by 2, that equals $82. Now what is that? Why is that even relevant? Well, this price point tells us right now at this second in time that it believes there's an 82% chance that this binary will close above 1.3960. Okay, so in a sense you can look at these prices on Nadex and you can come up with a midpoint, and it kind of gives you a percentage of probability. Okay, so for example, why is that? Well, when we're looking here, see some of these binaries down here, a lot of people will say, oh, look, I can buy this one. Oh man, I like that. I can buy this one for $11.50. So if I bought that for $11.50, I'm only risking $11.50, and I could make 88 bucks. Ooh, I want to do that. I like those odds. I like that. Well, what is that? What is that really saying here? Look at the difference here. We're talking about technically a 5% probability that this contract will expire in the money. Why? Well, because this is saying that the euro dollar would be greater than 0.577. Right now it's down at 0.565. The market has to move way up for this to expire in the money, doesn't it? So without knowing or having some indication from our chart, our indicators, our strategy or system that the market's moving and moving up and going to move up a lot, there's not a very high probability of this contract expiring in the money. Now let's look at this one. Why is this one right here priced at $76? It's priced a lot closer to 100 bucks. Why? Well, because what this contract says is the euro dollar be above 0.561. Where's the market right now? 0.565. So it's already above this strike price. It's already what we call in the money. It's already a true statement. So as long as the market keeps going up, or as long as the market stays right where it is, or even if it comes down a little bit but doesn't come all the way down to here, this contract will still win. That makes sense. It has a higher probability of winning because it's already a true statement. That's why it's priced a little bit higher. Okay, that's what we call an in the money binary. It's already in the money. The statement's already true. This cheap one we showed you here is what's called an out of the money binary because the market has to move way up to it. It's out of the money. All right, or if there's a binary that you see that's priced right around close to 50 bucks, say, for example, right here, what does this one say? The market will be above 0.565. Right now the market's at 0.566. It's very close. It's going to be priced kind of right in the middle between 0 and 100 because it's still close to a 50-50 chance or so, okay, of where it's going to expire at. Okay. All right. Let me see. Let me look at a question here. All right. My confusion is risk is different from the cost we buy, right? If I buy for 75, I need to put down 75 now, and I'm risking the same. That's correct. Whatever you buy for, okay, if you're buying a binary, whatever you buy it for, the amount you buy it for is immediately taken out of your balance, and that is your total risk. Okay, that's the most you can lose. If you held it to expiration and it lost, that's the most you'll risk, is the amount that you're actually buying it for. But if you're selling for 85, you're only risking 15. That's correct. And that's all you'll have to put down out of your account. Like if I were to sell this one right here for $18 or $21 now, that's my max risk. That's all that comes out. That's all that's held out of my account. Okay? So yes, you can hold a binary till expiration, and at expiration it's either going to be worth 0 or worth 100. The statement will either be true or false. Or you can get out early. Do you have to hold a binary to expiration? No, you don't. Okay? You can get out. All right? You can exit early, whether the market's going for you or against you. What do I mean by that? Well, let's just say, for example, that I came in here and I bought this binary right here, okay, for $46.25. Okay, boom, I just bought it. It's in here. All right, well, let's say the market starts going up, okay, and let's say if I hold it to expiration, it expires profitable in the money. I bought it for $46.25. It'll be worth 100 at expiration. But let's say as the market's moving up, let's say now this is worth $66 and I'm up $20 of profit. I can exit early and just take that $20 profit and go. I don't have to hold it all the way. Or let's say that the market's going against me. I bought this for $46, but now the market's going against me and this is only worth 20 bucks. I can get out early and just lose a little bit instead of lose the whole thing. So yes, I can get out early either way. Okay, now someone says, can I buy an in-the-money binary then sell it immediately? Sure, you can, but it's not going to be worth 100 bucks. Okay, if you're buying a binary and you want to get out of it early, you can get out of it for whatever is quoted on the sale side. If you sell a binary and you want to get out of it early, you can get out of it for whatever is quoted on the buy side, right? Because if I buy something, how do I get out of it? Well, I got to sell it. If I pre-sell something, the only way I can get out of it is buy it back. So yes, you can get out of a binary anytime. And what can you get out of it for? Well, whatever it is on the other side. Look here. I bought this for $46.25, right? Which one did I buy? The 10569. Well, right up here, 10569. What is it quoting for on the sale side right now? 38.50, 39, 39.70. See, current market. This price here matches this price here. That's how my profit and loss is determined. Because I bought it for $46.25. Right now, I can get out of it for $39.75, and that'd be a $6, $7 loss. That's how that price is calculated. Okay? So, because if I buy it, all right, and I want to get out of it immediately, well, the only way I can get out of it is the sell side. And this difference here is what's called bid-ask spread, all right? That's the spread difference between the buyers and the sellers right now. All right, that's how the market makers make their money. They're not trading against you. They're just supplying a market of, hey, we'll sell for this, we'll buy for this. But if the price starts to go up and I was right in my direction, then these prices will start to go up and I can get out early, whether it's going for me or against me. So it's just simple math. That's what I bought it for. Right now I can sell it for that, and that's what determines that. All right, so yes, I can get out of a binary early, whether it's going for me or against me. So yes, on the buy side, the amount I'm buying for is my risk. On the sell side, okay, whatever I'm selling it for is my potential profit. And the difference of where I sell compared to 100 bucks is my risk. Okay, so that is binaries in a nutshell. What can I trade? What markets can I trade binaries on with Nadex? I can trade stock index futures, I can trade spot Forex, commodity futures, and even economic events. All right, you can go right here on the Nadex platform and you'll be able to see that. You've got binaries on the stock indices. All right, we've got the 4 different US indices, the Dow, the S&P, the NASDAQ, and the Russell. We've got the Japanese market, the German FDAX, the London FTSE, and the China 50. All right, so you've got international and U.S. stock indices. All right, we've got Forex binaries, which is foreign exchange. All right, currency pairs, 10 different currency pairs. You've even got commodities. All right, copper, corn, oil, gold, natural gas, and there's even Bitcoin binaries and and event binaries, jobless claims and non-farm payroll claims, all kind of different things you can trade Nadex binaries on. Okay. Now, with Nadex binaries, there's a bunch of different binaries you can choose from. All right. There's actually 5-minute binaries on 4 different FX pairs. What do I mean by that? Well, right here, see this 5-minute binaries? Well, on 4 of the different FX pairs, the Aussie dollar, euro dollar, pound dollar, and dollar yen, they have what's called 5-minute binaries. What does that mean? Well, there's 5 different strikes to choose from, and there's a new one that starts every 5 minutes and then expires 5 minutes later. All right. Now they don't have a 5-minute binary at the top of every hour, meaning like 7:55 to 8 p.m., 8:55 to 9 p.m. Otherwise, every 5 minutes, 11 times an hour, there's going to be a new 5-minute binary that's open up on 4 different currency pairs, and that's 23 hours a day. Okay, so there's a ton of different binaries that can be traded. All right, during the daytime, there's 20-minute binaries on the 4 U.S. stock indices. All right, there's also intraday binaries that new ones start every single hour. All right, like if you look here even tonight, like on Forex, for example, go to the euro dollar, got some that started at 6 p.m., go to 8 p.m., 7 p.m., go to 9 p.m. There's a daily one at 3 a.m., 7 a.m., 11 a.m., even all the way out to 3 o'clock tomorrow, and even some at the end of the week. There's all kind of binaries there. Okay, there's a ton of different binaries there to choose from. So whether you're full-time or part-time, whether you're looking for something short-term or longer-term. Okay, let's see here. Yes, the difference here, the buy side and the sell side. All right, see the difference here? Okay, those can change. Yes, especially at night when liquidity is very low and there's not a whole lot going on, you might see a little bit wider bid-ask spreads. During the daytime, especially in the mornings, during some of the opens, you might see these only be a few dollars apart. Okay, it all depends on implied volatility and what is going on and movement of the market. All right, but during slow times, you're going to see a higher bid-ask spread. That's true with any options market. That's just how options work. Okay, so you can see these change. At night they might be a certain amount wide. In the afternoon they might be a little different. In the mornings they might be real close. It all depends on what's going on. That's just how the option markets work there. Okay, so all kind of different binary options there to choose from with different expirations. So let's talk a little bit about binaries. People say, hey, all right, I've been on this webinar less than 30 minutes. I understand binary options. I'm ready to trade them. Okay, well, let's talk about some pros and cons of binary options. First and foremost, I'll tell you one of the biggest mistakes people make with binaries. Now, I love binaries. I trade them all the time. I trade them every day. Binaries are great. You'll see us trade them all day long in our trade rooms, and we love binary options. All right. First thing you got to realize, biggest mistake people make with binary options is they say, okay, I know if I buy and it expires in the money, the statement's true, I know it'll be worth $100. So I don't want to risk $71. I don't want to risk $47. I just want to risk $11 and hopefully I make 100. Okay, well, we talked about that, right? We've already talked about how that's very low probability. What you cannot do is go in and just select a binary option just due to the price. Just because you like the price or you like the risk-reward ratio, that doesn't mean anything. You have to have a strategy or system. You have to be looking at a chart and your indicators in your system to know and be able to read the market. Is the market going up? Is the market going down? Is the market going to stay flat? You have to have a strategy or system behind it, and therefore use the right binary. Okay? You have to use the right binary. If you're just going in and just randomly selecting cheapo binaries and hoping it works out, you're not trading. You're just gambling. Okay? And trust me, it's not going to work out for you. Okay? Now, I'm not saying you always have to go in and buy this real expensive one because it has a higher probability. I'm not saying that either. I'm saying one of these others might work for you. You just have to make sure you have a strategy or system. And the other thing to realize is, even if you do go in with one of these higher priced ones and you like that because it has a higher probability, remember, you don't have to hold it to expiration and you don't have to lose the full max risk. You can get out of it early. Remember that. Okay? So, yes, but we are recording this webinar. Okay? So that's one of the first things to keep in mind. A common mistake with binaries is choosing the wrong binary, for one, and for two, just randomly choosing a binary without a strategy or system because it has a low risk. Okay? Now, let's look at something here though. Let's look at this binary right here. And what is this saying? This statement says the euro dollar to be above 0.569. Well, right now the market's at 0.567. So it's only 2 ticks away. Okay? So someone was asking earlier, well, what do you mean by volatile? Well, right now I can buy this for $40. Okay? If it expires in the money, it's worth what? $100, right? So sometimes when you think about trading, or you've listened to the news, you're like, oh, the market moved 250 points today. Or somebody saying, oh, I caught this big run in trading, the market moved like 120 points and I made all this money. Well, when you think about the market only moving 2 or 3 ticks, that doesn't seem like very much, right? And it's really not that much. And it doesn't really seem like you could possibly trade something that could actually make some money with just potentially just a few ticks of movement. All right, but it can, and that's why binaries are a volatility instrument, which means just a few ticks difference can be a big difference in the value. Why? Well, because right now I can buy this for 29 bucks. But if the market just goes up 4 ticks, what happens? This value starts to shoot up. What if it goes up 5 ticks and right at expiration, it's at 0.570? Well, it only takes 5 ticks to get to 0.570, and all of a sudden this thing shoots from 31 bucks up to being worth about 100 bucks, right? Does that make sense? Let's take a look at something here. Right here, this is 0.569. Well, look just 4 ticks down, 0.565. What's the difference in value there? See that? What about another 4 tick, 0.561? Boom, now we're getting up there. Just a few ticks can make a big difference in the value of a binary. Okay? So that is one of the pros of binaries. Even if there's not a lot going on, there's no news going on, there's no trending, the market's just kind of slow. I mean, it's kind of moving a little bit, but it's nothing major. Binaries can still be extremely profitable if it's going in the right direction and you've bought or sold in that direction. Just a few ticks difference can make a big difference in value. Okay, does that make sense? All right, does that answer your question? See here, who asked me about the volatility question? William, does that make sense? Okay, so that's what I mean. Just a few ticks movement can be quite a bit. All right, so that is one of the big pros of binaries. But now, in the same breath of that though, with a binary at expiration being all or nothing, it literally can come down to 1/10 of one tick. What do I mean by that? Well, let's look at another example. So you all understand that just a few ticks can make a big difference okay, William, yep, does that make sense now? No problem, you're very welcome. So that's what I mean, just a few ticks movement can make a big difference in value, right? Big difference. But let's look at something. What if I bought this right here for $68? I'm saying the market will be above 0565. Where's it at right now? 0566. See that? It's already one tick above it, so it's at 67 bucks. I buy it. What happens if the market goes down two ticks, two little ticks? At expiration, what is this thing going to be worth? Anybody answer that? I want to make sure you're following along here. Zero, right. Exactly. It'd be worth zero. Okay? Because I'm saying the market would be above 0565. Right now it's at 0566. It goes down two little ticks. I bought it for 68 bucks. It's going to be worth zero. Okay? So it works both ways. That's the pro and the con that you got to be aware of. Is yes, just a couple of ticks movement in the market can all of a sudden make something that's I buy for 39 bucks be worth 100 bucks, and I like that. But it can also be something I buy for 67 bucks, goes against me a couple ticks, boom, now it's zero. All right, so that's a pro and a con that you got to keep in mind there. Okay, just a couple ticks can be large profits, but a tick against you can mean all or nothing, kind of mess with your heartbeat a little bit, right? Another big pro about binaries, especially if you're new going, what do I do? Binaries or spreads? Well, some people really like the fast-paced trading of binaries, all right? And some people are part-timers. They don't have a lot of time to trade when they're first starting. They have full-time jobs. They're trading on the side. They're trading early morning or at night. And binaries can be great for that because of, well, the 5-minute binaries or the 20-minute binaries. Okay, there's not 5-minute or 20-minute spreads. Okay, but sometimes people don't have a whole lot of time, and so they say, hey, I'm a part-timer, I love binaries, I can go into this 5-minute binary and pop in here, and I just got some new ones that came out. I got 4 minutes left. I'm going to buy or sell one of these, win or lose, boom. And then another 3 minutes and 54 seconds from now, there's going to be a whole nother set of these. I can do it again, boom. 5 minutes later, boom, 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 boom. Okay, so that is another positive about the binaries is yes, they're fast-paced trading. Some people love that, some people hate that, but sometimes part-timers love it. They can trade in the mornings or evenings. We even have people that trade on their breaks and their lunch breaks at work, and the 5-minute or 20-minute binaries during the day is something they love to do. Okay, because the spreads can sometimes be a little bit longer term. Binaries can be really quick. Binaries are easy to understand. Like I said, had been on this webinar long, you understand it. There's binaries, I can buy them, I can sell them. There's different ones to choose from. I get out of it early or at expiration, they're worth 0 or 100. Perfect. I understand there's different binaries, out of the money, at the money, in the money. I've got different options. I can choose different strikes. But again, it all boils down to making sure you do have a strategy or system behind it. That you're watching the chart. You know, according to your strategy or system, the market's going up, or the market's going down, or the market's staying flat. I know which binary to pick. All right? I can hold it to expiration, or I can scalp it. What do I mean by scalping it? Say I buy a binary for 50 bucks, it goes up in value to 75 bucks, and I get out of it. I just scalped it 25 bucks, and I got out of it. I'm not going to try to be greedy and hold it all the way. Maybe I don't have a whole lot of time. Maybe it looks like the market may be reversing. I get in and out. Okay, so you do have a lot of options with binaries. They're very easy to understand. Doesn't require a huge account to get into them. Okay, and you can get in and out. Okay, so those are some of the pros and cons of binaries there. All right. So, any questions on what we just covered? We're not getting into charts and systems and strategies and all that. Just recovering basics of a binary, different binaries, pros and cons. Okay, and that's the biggest thing to keep in mind. They're easy to learn, they're easy to understand, they're a little bit harder to trade, even though they're easy to understand, because you do have expiration times and you've got out of the money and in the money. Am I picking the right one? Okay. And yes, I like that just a couple of ticks in movement can go in my favor and I can make a lot. Also got to remember, just one tick against your strike, it can go way down in value quickly, or at expiration it can be worth zero. Okay. Yes, Valerie, this webinar is being recorded. Once again, if you go to the apexinvesting.com website, okay, let me just show this one more time here. Go to apexinvesting.com, create a free username and password. Go to the questions tab. Second one down says Trading Questions Forum. And once you get into the forum, scroll down towards the bottom and it will say Watch Webinars Here. It'll be right here under Newest Webinars. I'll have it uploaded there in about an hour, hour and a half, okay? And it'll be dated. And again, if you've missed some of the last few weeks, you can go back here and watch them as well, okay? So you can watch that right there, okay? Can you repeat the scalp statement, getting out early with example? Nina, all I'm saying there is you don't have to, it's what we already covered. You don't have to hold a binary till expiration. All right, you can get out of a binary early. Like this one I bought here, doesn't expire till 9 p.m. Well, I bought it for 46 bucks. If the market started to go up and it was now worth 66 bucks, I could get out of it and keep that $20 difference. That's what we call a scalp. I got into a trade, it went up 20 or 30 bucks and I got out of it. I don't have to hold it till expiration trying to get 100 bucks. I can hold it, but I can just scalp it. If my strategy or system's telling me, hey, the market's starting to go up, so I buy something and want to kind of follow that market up and try to make some money with it. But let's say as the market's going up, it starts to hesitate a little bit. I don't have to stay in that. I can just get out of it real quick. Does that make sense, Nina? Like, let's say I see the market's going up, so I buy, but then it starts to hesitate and I'm up 20 or 25 bucks profit. I can just take that profit off the table now and just go. Maybe the market would have come down against me. Maybe it would have kept going and I would have won the whole 100 bucks, but I don't know. So that's called scalping. You just kind of get in and get out. Okay. So that's kind of binaries in a nutshell. All right. Let's see here. Yeah, exactly. Yeah, you buy a binary when you think the market's going to be above a certain strike price. Okay. You sell a binary if you think it's going to be below that price. All right. So buy is up, sell is down. Yep, exactly. Okay. So that's binaries. Like we said in the beginning, Nadex offers two different products. They offer binary options and they offer spreads. So now we're going to talk a little bit about spreads. So what I need you to do is kind of forget everything we just talked about. A lot of people think that spreads are the same things as binaries or they work the same. They're completely 100% different. So put on a different thinking cap, put on a different mentality cap, and we're going to switch gears over here. All right. So let's talk about what is a spread. What is a Nadex spread? Well, again, all products with Nadex are capped risk. You cannot lose more than you put up in margin. The amount you risk is your margin. All right, your risk and your margin is the amount that you put up to get in that trade. All right, but you still have a lot of leverage with Nadex spreads. You can trade stock indices, future commodities, and Forex pairs. Now, on a spread, the price is driven by the underlying market. It's not driven by supply and demand of the spread, as the market makers making the market based on where the underlying is located. And it moves in pips. It's not like a binary. It's not like a binary where a couple ticks difference here or there will put you over or under the strike, so the price can move from 30 up to 100 real quick, or if you bought it for 80 and it goes against you a tick or two, all of a sudden it's worth 0. It's not a volatility instrument like a binary, okay? It moves in pips. Pips is the last digit quoted, and every pip is worth $1, okay? It mimics the market, all right? Just like if you were watching a stock, all right? And let's say you bought a stock for $100. You bought in at $100. Now the stock is worth 101. Well, your stock is then worth 101. It's worth $1 more. Then the stock goes up to 103. Then the spread moves up to 103. It moves with the market as the market is going. As you see the market moving up or down on your chart, tick per tick, the spread is moving up or down, tick per tick, in a nutshell. Okay, now there's some different spreads and premiums. Well, that's advanced stuff we don't have to get in tonight. But the basics of it is it's $1 a pip. It's a way to mimic the market. Okay, Tharab says, how can you tell whether the market is going up or down by looking at the chart? Well, you have to have a strategy or system that you use there. You have to know what you're looking for. You have to be able to read the market. You have to have a system, a strategy, indicators that you use, that you've studied, and you're familiar with when these indicators line up and when this happens, the system I'm following, the strategy I'm following is giving me a, indication that there's an uptrend going on, there's a downtrend going on, there's a reversal about to go on. All right, that takes study, and that takes having a strategy or system. Okay, and by the way, let me just stop real quick here. I skipped one thing. If you go back to the Apex Investing website, because we already talked about binaries and the basics of them and pros and cons, but I want to, for those of you interested in learning how to trade binaries and interested in some strategy and system and what do I look for, right here under our website under Binary Essentials, third one down, Trading System Courses. All these different ones here go through step-by-step courses and how we use indicators and charts and what we're looking for before we enter and exit on binaries. All right, so we covered the binary section. Right there on our website is where you get some free education on how to trade them, how we trade them, what charts we use, what indicators we use to show us an entry and what we're looking for. Okay, so check that out for binaries. But okay, back to spreads here. Every pip move is worth $1. Let me lay it out for you in a quick nutshell here. What is a spread? All right, a Nadex spread, okay, has a floor and a ceiling, meaning a top and a bottom. What does that mean? Well, if we're on the Nadex website, let's look right here, Forex spreads. You see that? And let's just pull the euro dollar. All kind of different spreads, and new spreads come out every hour, just like binaries. Let's just look right here from 7 p.m. to 9 p.m. There's 3 different spreads. See, this one is from 0570 to 0670. This one's from 520 to 620. This one's from 470 to 570. So this is the floor, meaning the bottom. This is the ceiling, meaning the top. Does that make sense? There's basically a top and bottom of a spread, and there's different tops and bottoms to choose from. What does that mean? Floor and ceiling. Okay, let's look at an example. Euro dollar. Say the floor of the spread down here is at 1.2400. The ceiling is at 1.2500. The spread equals the difference between the floor and ceiling. So this particular spread is a 100-point spread or 100 pip spread. All right. So the pip is the last digit quoted, this one right here. Okay. Each pip is worth $1, and there's 100 pips in this spread. Now don't confuse that with a 0 or 100 binary. All right. It's just a 100 pip difference between the floor and ceiling. You cannot, so if I was selling, let's say I was selling a spread, wherever the market is at the time between this spread, if I'm selling it, I'm saying what? That the market's going down, right? So if I'm going to sell, say the market's going down, what if it goes against me and I'm wrong and it goes up? Well, I can't lose additional money above the ceiling. So if I say the market's going down, but it goes up, I don't lose any more past this ceiling. It could go up 200 points the wrong way against me, but I don't lose any more above this ceiling. That's my capped risk. If I'm right and the market goes down, I don't make any more past the floor. Okay? My spread, where I make money or lose money, is between this floor and ceiling. So for example, let's say I sell, and when I sell, the market's right here at 24.90. That's where I enter a sell order saying the market's going down. Well, the ceiling is right here at 2,500. So 2,500 minus where I sold at, 24.90, is 10 pips. So if I sell, say the market's going down, but the market goes up instead, what's the very most I can lose? Let's say I sell, say the market's going down, but it goes up 200 points against me. What's the most I can lose? Only 10 pips, because I only lose money to the ceiling. And if I'm right, I only make money down to the floor. Okay, so each pip is worth $1. So there are 10 pips of risk here. So my maximum risk, the absolute most I could lose, is $10. Now, there's 90 pips going all the way down to the floor. All right, so there's 90 pips of potential profit. Each pip is worth $1. So there's a potential profit of 90 bucks. Okay, now, what if I'm buying a spread? Same thing, I got a floor and a ceiling. I can't make any additional money because if I'm buying, I'm saying the market's going up. I can't make additional money above the ceiling, but I'm not going to lose any additional money below the floor. And I don't get stopped out. Just because the market hits my floor or hits my ceiling does not stop me out, does not close my trade. That trade is still open. So let's say that I buy, because I think the market's going up, I buy at 24.10. Well, what happens right away? Market pops up and then boom, goes against me. But what's the most I can lose? So I bought at 24.10. The floor is right here at 2,400. So there's only 10 pips difference there. So the most I can lose is 10 bucks. That's my maximum risk. And just because the market came down and hit my floor and even went past the floor, doesn't matter. It doesn't close my trade. I'm still in the trade. It can fly down hundreds of points against me, but I only lose 10 bucks. I don't lose any more past this floor. But if the market goes up, I can make money all the way up to 2,500. All right. So the ceiling is 2,500. I bought at 24.10. The difference is 90. Each pip is worth $1. I've got 90 potential pips or $90 profit potential in this spread. Okay. Now, spreads have an expiration time, just like binaries. See here where we're looking at the Nadex platform. 6 p.m. to 11 p.m., 6 to 8, 7 to 9. There's different spreads to choose from. So they do expire. Okay, and just like with binaries, I can hold it till expiration, or I can close it at any time. If I bought it here, I can let it come up here and sell here or here. I can get out of it at any time. I can close it early, whether it's going in my favor or whether it's going against me. All right. Let's say that I bought this spread right in the middle at 24.50. Okay. If I bought it right in the middle at 24.50, I could either lose 50 bucks or I can make 50 bucks, right? Well, I can close it out anytime early. Let's say I bought it right here thinking the market's going up, but it starts to go down. Do I have to stay in it and let it go all the way down? Do I have to lose $50? Do I have to? Or if it's going against me and say it's went against me 20, 25 points, man, I was wrong. Let me just get out of it now. I could get out of it and only lose 20 or 25. I don't have to hold it all the way down and take the full $50 risk, do I? Just because I buy in here, so therefore it shows me, well, here's your max risk, doesn't mean I have to hold that for max risk. I can get out of it. Or let's say I bought down here at 24.10 and the market went up to 24.60. So I'm up $50 profit. Hey, I just want to get out now. I might make more, I don't know, but I got to go. I can take that. I can get in or out anytime. And I don't have to take max profit. I don't have to take maximum loss. Okay? So I can get in and out anytime. Or if I hold it till expiration, then what I'm going to get is the difference of where I bought or sold compared to where it expired at. Okay? William says, so if I buy at 400 and it goes down, I lose nothing. Meaning if you bought right here, yeah, I mean, technically, yes. I mean, if you bought at 2,400, you would lose nothing, okay? But you'll never find a spread that's right at zero. Like you'll probably always have a few dollars in there at least, okay? But yeah, if you bought it for 24.05 and it went down 500 points, you're still going to lose $5 because you can't lose any less past the floor, okay? Or let's say you bought it at 24.05 and it went up 500 points. You're still only going to make money to the ceiling, okay? Your floor and ceiling is what caps you and protects you, okay? It's kind of like, think of it like a box, okay? So if the spread expires, it will close at the settlement price at the time of expiration. Like I said, wherever you buy or sell compared to where it expires is what you get. But in a nutshell, that's a spread. $1 per tick up, $1 per tick down. It kind of mimics the market, okay? Kind of mimics the market there. So there's intraday spreads that that are just even a couple hours wide. There's larger spreads that go up to 22 hours. There's always different spreads. There's always a ton of different spreads to choose from, okay? So that is spreads. So let's talk a little bit about the difference of binaries and spreads. We've talked about binaries, talked about spreads. Let's talk about a few things here. When you're looking at spreads, you cannot think like a binary trader. It's not all or nothing, okay? With a binary, what are you saying? Well, with a binary, I'm saying, hey, I'm going to buy this binary, saying the euro dollar will be above 0.569, and I bought it for 46 bucks. Well, if it expires at 9 p.m. at 0.568, one tick, boom, this is zero, and I just lost $46, right? Well, what happens if I did a spread right here? I already showed this example, and the market went against me one tick. How much did I lose on the spread? $1. Okay, does everybody get that? If a spread goes against me by one tick, I lose $1. If this binary right here goes under my strike by one tick, I lose the whole thing. Whether I bought that binary for 46 bucks, or let's look at another example here. If I were to buy this binary right here for $83, $81, why is it priced so high? Well, because I'm saying the euro dollar would be above 0.561. Right now, it's at 0.568. So it's already above it, right? But what if the market came down 8 ticks? I would lose. This binary would expire as a loss, correct? Everybody get that? So the market goes down 8 ticks, I'd lose 80 bucks on this binary. If I had a spread in the market, if I bought a spread thinking the market would go up, but instead it went down 8 ticks, what do I lose on the spread? $8, right? So that's a pretty big difference, right? Does that make sense? So that's one of the pros and cons there as we talk about with spreads. Okay. Now someone says, why is it that spreads are priced in such a way that you can almost never make a profit unless news or something causes the price to surge? Well, that's how a spread works. You can make plenty of profit with the spread, but again, the market has to move. If the market only moves up, wherever you buy the spread to when it expires, if the market only goes up 8 ticks, what are you going to make? $8. If it goes up 80 ticks, yeah, you make $80. But the market does have to move for a spread, because that's what a spread is. It's not a volatility instrument like a binary. It's not about just a couple of ticks being above. It's not a yes or no instrument. It's not a, well, a tick or two this way can mean the difference of 0 or 100, or a tick or two this way can be a difference of I bought it for 30, now it's worth 100. It's mimicking the market tick for tick. Okay, market moves up a tick, spread moves up a tick. Okay, so yes, you do have to have some movement in the market there, and we're going to talk about that a little bit here. So everybody sees that though, right? Where I buy this for $88, market moves 8 ticks against me, I lose $88. Spread moves against me by 8 ticks, I only lose $8. Okay, so that's a big thing to consider there, right? That's a pretty big difference. Now, so again, spreads are not all or nothing. Okay, it's not about 1 tick or 1/10 of a tick determining whether or not it's a win or loss. Just each tick is $1. So it's a complete different product, complete different instrument than a binary. 1 tick is $1. Okay. Vita said, no, what I mean is that your affiliate entry is always a full extent of the move for the period. Okay, Vita, I'm not exactly sure what you're saying there, but it sounds like to me is what you're doing is, and I'll show you, we can get some more info on this, is you're looking at spreads, for example. Let me refresh this. And for spreads, you're probably going in and you're always choosing this real low price spread right here, right? Like you want to buy this spread and you're only going to risk $6, right? But where you're buying the spread at is at 0576. The market is at 0567. So the market has to move up almost 10 ticks to even get to where you bought it to start making $1 a tick, right? As opposed to if you took like a middle spread where you buy it for 0571 and the market's at 0568. There's only a couple points of premium in there, just a couple ticks, and then you start making money. Okay, if you go with one of the upper or lower spreads, the real lower priced ones, you'll see that they're farther away. Okay, you're not buying in right at where the market is. In exchange for that real low risk of $7, you're buying it at 0577. The market's at 0568. So the market has to move up to where you bought in at it for it to start moving. Okay, it's a little more advanced. I'll show you in a minute where you can get some info on that. So it's not like a binary. It's not all or nothing. It's not based on 1 tick or 1/10 of a tick. You're just following the market along $1 per tick. Okay. Now again, I love binaries. We trade them all the time. Binaries are the buzz. They're exciting. They're really easy to understand. Spreads are a little harder to understand, but once you do, they're a lot easier to trade. Okay. Once you get the basic spreads down, you'll love them. Beginners love them. Intermediates love them. Even pro traders have traded for years love them. All right. Especially if you have a smaller account, I would definitely tell you to take a look at spreads. Okay. And don't be confused with max risk. Remember, like I said, you might get in a spread. For example, let me show you here. Let's say that I want to get in one of these big spreads right here, and I want to get in one of these longer term spreads, and I want to buy it, and it says, ooh, max loss 124, max profit 126. Oh, I don't want to do that. That scares me. What scares you? This right here, because it says max loss. What has to happen for me to lose $124? All this $124 is I have to put up, that's the difference of the floor compared to where I'm buying it. So I have to put that up on hold out of my account. What has to happen for me to really lose that whole $124? How far does the market have to move? Yeah, it has to go down 124 pips. Do you think I'm going to sit there and watch that thing go against me 124 pips? No, I bought it because I think the market's going up. But if I'm wrong and I see the market going down 5, 10, 15, 20, 25, yeah, I was probably wrong. I'm going to get out. So I saw it go against me 25 points, and I got out. How much did I lose? When the market went against me 25 whole pips, and I got out, what did I lose? $25. So yeah, don't let this number scare you. I just had to put that up to enter the trade. If I see it going against me 15, 20, 25, I'm going to get out. And I lost 25 bucks. What happens if I bought an $80 binary and the market moved down 25 ticks against me? Yeah, that binary was a zero. I lost the whole 80 bucks on that binary, right? Okay. Let's see here. Valerie says, but if you bought 10 tickets in a spread and the market moved by 5 ticks, that would mean I made 5 ticks. No, that's not. If you bought, it depends on which one you bought. Valerie, you have to look at where you're buying. If you bought this right here, if you bought 10 of these at 0578 and the market moved 10 ticks, where's the market? It's at 0568. So if the market moved up 10 ticks, it would move right up to where you bought it. So you wouldn't make anything on that. It'd have to move further than that for you to make any money because you bought this real low risk spread that was so far away. Because remember, at expiration, it's wherever you buy in compared to where it expires. Okay? So, but had you bought this spread right here that's at 0571 and the market's at 0569, it's only 2 ticks away. So yeah, if the market moved 10 ticks, you would make $8 on this one. And if you bought 10 of them, yeah, you'd make 80 bucks. You just have to look at where you're buying in compared to where the market is. That's why there's all kind of different spreads and different floors and ceilings. Okay, I'll show you where you can get some more information on that. Okay, let's see here. Frank says, if you trade spreads the way you just said, what's the advantage of spreads over trading Forex markets using stops? Well, if you're going to trade Forex markets, yes, you definitely need to have stops. Okay, that is the biggest thing there, is to protect you against big spikes, protect you against, like, if you guys know what happened this past January with the franc, even people with stops didn't get filled because it flew way past it and it went against hundreds of points. And there was people at the end of the day that owed thousands, tens of thousands, hundreds of thousands of dollars to their Forex broker because that thing just skyrocketed against them. That can never happen with a Nadex spread because you don't lose anything past that floor or ceiling. Okay, so you have capped risk there. And the other big difference is you have a lot less margin. Okay, let's say, for example, that I wanted to trade this spread right here. What do you put up for, Frank, for example, like if you're doing a Forex lot, you might have to put up like, what, $3 in margin to do that, you know? Well, this is $1 a tick here, and let's say I even did 10 of them, so it would be $10 a tick. My margin's only 1,200 bucks. Okay. If I was to do this spread right here, because I was expecting a pretty big move, and I did 10 of those, my margin's 80 bucks. Okay, so it's all about the margin and it's all about the capped and limited risk there. Okay, so Again, just because a spread might have $50 max risk, $200 max risk, it has to move against you 200 points. What's the probability of that? All right, you can exit it early. Max risk is not always true risk that you will take on. You have to look at max risk versus realistic planned risk. If you see it moving against you, you're going to get out. Yeah, you may have to tie up a little bit more of your account to place the trade, but it doesn't mean you're risking more. All right, most of the time your realistic risk on a spread is lower than that of a binary, just like I showed you right there. It might tell you, oh, you got to put up $120 margin. But if I see it going against me 25 ticks, I'm going to get out. And I lost 25 bucks. I didn't lose 85 bucks on a binary. You know what I mean? So most of the time your realistic risk on a spread is actually lower than a binary. And you actually have a much higher profit potential normally on a spread. Okay? And your probability is much higher since it's not a win or loss based on 1/10 of a tick. You know, like if you want to do some scalping, it's not always that easy to hop in on a $15 risk binary to make 15 bucks. But it's not that hard to do it on a spread, day or night, even without a whole lot of movement. Okay? So spreads, a couple things on some spreads here. Let me show you, and let's see here. Valerie, I want to show you where to get that information as well. Right here under the questions tab. Okay, well, spreads. What's my favorite way to trade spreads that we do at Apex? If you're on our Apex website here, go right here. Third one down, step-by-step courses. It's called the iZone Sharpshooter course. Okay, the iZone Sharpshooter course. This goes through showing the iZone Sharpshooter system. This is the system that we use for, well, we use several different ones for spreads, but this is by far our favorite to use for spreads. If you want to go through and check that out, we go through and explain the system, show entry and exit rules. We also show how to use the spread scanner. We talk about spreads, misconception, and training. This is one of the videos you might want to check out right there, Valerie, as far as why it's a huge deal to make sure you pick the right spread. A lot of people say, hey, I do spreads, but I don't ever seem to make a whole lot on them, even with a little bit of move. It's all 99% of the time is because you're just choosing the wrong spread. Okay, and the reason you're choosing that wrong spread is exactly what I showed you here. Well, I think the market's going up. I want to buy. Ooh, I only got to put up $9 for that spread. Well, I think the market's going up. I want to buy. Oh, I got to put up 128 for that. I don't want to do that. So what you're doing is you're getting in so far away from where the market is. It's no different than on a binary saying, well, I know if it expires, it'll be worth 100. So yeah, I want to buy this $10 binary. Remember what we talked about how that's not always the best thing to do, right? Because it's so far away. The market has to move so much. It's not a very high probability trade there, right? Okay. And that's the same exact thing you're doing with, let me show you an example. Let me show you an example here. A lot of times people will say, all right, you see what I'm talking about there, about the difference of how close that one spread is over the other to where you're buying it? But what you liked was the fact that you're only going to risk $9. Or like if you wanted to sell this spread, you'd only be risking $8. You don't like that you have to put up 129 here. But if the market goes against you 20, 25, you're going to be getting out. What you're doing here is you're choosing the wrong spread, because technically you only want to risk and put up 9, 12, 15 bucks, as opposed to just putting up 129 to get in the trade. But if it goes against you, get out at 20. Because of a $5 difference there, none of the spreads are working out for you. Okay, so all right, Frank. So yes, if you're on the Apex website here, okay, if you're on the Apex website, go right here under the Apex Elite Room. Step number 3, step-by-step courses. Go to iZone Sharpshooter. This goes through and walks through step by step the main system we use to trade spreads. And then after the main system, we go through and breaks down spreads for you. How to use our spread scanner, spreads misconception, the simple method to choose a Nadex spread to mirror the market. When we say mirror the market, that means tick for tick, dollar for dollar. Check out this next one. The small account method for Nadex spreads. Hey, I want to trade Nadex spreads. I got a smaller account. Boom, here you go. The easy premium filter for Nadex spreads. We go through and walk you through all that. Okay. The other thing is, one other place here, because we talked about binaries earlier and I showed you where to get training on that. Right here under the questions tab, trading questions forum. If you go down here to watch webinars here, Nadex spread webinars. Click this, and what you need to watch is this one right here, the ins and outs of Nadex spreads. We go through and we break down spreads, exactly how to use them. What I did tonight, showing you the basics, talking about risk and reward. Then right here, what we've been talking about, Valerie, about, oh, well, where are you buying? What's the proximity of that spread? Is there any premium? We talk about proximity and premium. You go through and watch those 4 videos there, you'll understand spreads 100%, and you'll totally understand why you might be getting the wrong spread. Okay? John, is it true that a binary is a tick -10 and a spread is a pip? Robert, I'm not sure what your question is there. Spreads are $1 a pip, whether it's going up or down. Binaries have nothing to do with ticks per dollar. It's all about does it expire above or below your strike price. Binaries don't work that way as far as 1 tick equals X amount of dollars. It doesn't work like that at all. It's not tick based, okay? So that's where you can get some information there about spreads, okay? So a couple more comparisons here, all right? Let's see, Marvin, if I buy a spread at $25 and the market is moving against me, do I just need to sell a spread? And well, if you only have $25 risk on a spread, like when you buy in, you know, you may not really want to get out of it. You might just want to leave it open, okay? You might not have a stop loss. But yes, if you buy something, the only way to get out of it is to sell it, okay? So, for example, remember this trade I had opened earlier? This binary that I bought? And I bought it for $46.25, remember? Well, I bought it saying the market's going to go up. The market went up. What can I sell it for now? 78 bucks. Look, so I'm up. I'm profitable $32 right now on that spread, on this binary. So I bought this binary. See, it says +1. If I want to get out of it, what do? I click it. A ticket automatically pops up marked sell, right? Because, hey, if I'm clicking it, I want to get out of it. If I bought something, there's only one way I can get out of it, and that's to sell it. So I click it. I want to show you something here. Look at my balance, 18,355. See that? I'm profitable. I bought it, so I click it. I want to sell it. I sell it. The order's gone. See that? I got out of it. Order's gone. So I got out of that. So no, did I keep it till expiration and let it expire at 100 bucks? No. I got out of it early. I was up 30-something bucks. I got out of it. Okay? So if I bought, yes, so if you buy something, you get out of it by selling it. If you sell something, you get out of it by buying it. Okay? So that's how that works. See, boom, it went up. Bam. Got it. So a few comparisons. We talked about earlier how binaries are volatility instruments. Even just a few ticks in your direction can make a big difference in value. But for larger moves, bigger moves in the market, you actually might be able to make a lot more money in a spread, right? Because what if your strategy or system's telling you the market's going up? Well, if you buy a binary for 80 bucks, the most you can make is 20 bucks. If the market moves up 150 points, you still can only make 20 bucks on that binary. But if you had a spread that had 100 or 200 points till the ceiling, you'd make a lot more money on the spread. Yes, you can do multiple binaries, you can do multiple spreads. Yes, if the market's only moving a few points, you might win the binary and you might have only made a few dollars on a spread. So yes, that is one of the things there. Hey, thought the market was going up. That's what my system told me. It only went up 6 ticks. So I would have won on a binary and made 20 or 30 bucks or whatever. But I only made like 6 bucks on my spread. Oh man. Okay, granted. But what if the market goes against you on a binary? What if it went against you 3 ticks against your strike? You bought a binary for 80 bucks. You could lose the whole 80 bucks, but you only lost $3 on a spread. So it goes both ways. You have to realize that, right? It goes both ways. Okay, you can't just look at it as the times you remember that you would have won certain money on a binary. You also have to look at it as, well, also what did you lose? So it goes both ways. Quick example here. Quick comparison. See if you can follow me. I'm not going to spend a lot of time on this chart and get into what all this is, but one of our systems is called our Apex Elite system. Apex, A-P-E-X, right? A is kind of alert, P is pivot, E is we enter the trade. Okay? These squares, these are 20-minute time frames. Each one of these boxes is a 20-minute time frame. So let's say on the YM, which is the Dow, let's say I'm trading 20-minute binaries. Okay? Well, so this is the start of a 20-minute binary. This is the expiration of a 20-minute binary. So let's say I see PE, boom. I get an entry. It's green entry, which means long. So let's say that right here on this E, I said, well, I'm going to buy a binary, a 20-minute binary. It means it's going to expire right here. Say I'm going to buy it for 80 bucks. As an example. Boom, market kept going up. It expired profitable. I made 20 bucks, right? Nice. A little bit later, I'm watching it, get another APE. I'm going to enter right here. I'm going to buy a binary. It expired. Boom. Nice, easy little system, right? Okay. But let's say the APE right here. Okay, and then what happens here? I get another APE. I enter. I buy. Up. It went against me. So what did I make right here? If I bought this binary for 80 bucks and expired in the money, boom, made 20. Nice. Got another one right here, bought it for 70 or 80 bucks. Boom, it expired. I made another 20, 30 bucks. So say I made 50 bucks, right? Then this one here, APE, I buy it, up, it goes against me. What I just lose if I hold that? If I bought a binary here for 80 bucks and I held the expiration, it lost. I just lost 80 bucks right here, right? Let's say I got out of it at 40, so I only lost 40 bucks. That makes sense? So I lost 40 bucks right here, but I made 20 here and I made 20 here. So I'm at zero for the day, right? I made 20 or 30, I made 20 or 30, I lost 40 or 50. I'm basically at zero, right? But what happens if right here, APE, boom, what if I got a spread? What if I bought a spread right there? And I stayed in that spread all the way up here, and then until the market kind of came down against me, I got out of it. Well, where did I get in right here? Like 17,740. Market went up here, and I got out at what? 760. So about 20 bucks on that spread, right? So I made 20 or 30 bucks on the spread. All right. Well, I risked 80 bucks on a binary. if I'm going to get out of a spread, if it goes against me by 20 bucks, how many spreads can I get and still have the same $80 risk? Let me say that again. Remember what we've talked about? Saying, hey, I'm going to buy a spread because I think the market's going up. But if the market goes down against me like 20 ticks, I'm going to get out and lose 20 bucks, right? So I'll risk $80 on a binary. But if I'll also risk 80 bucks on a spread, how many spreads can I get if I'm going to take 20 bucks a hit? I can get 4 spreads, right? So how much money would I have made had I gotten 4 spreads here? 160 bucks. And I still had the same exact risk as an $80 binary, right? So yes, right here, is this a nice little pop on that E and get a 20-minute binary and make a little money on a binary? Absolutely. Just that little move made our binary win. Great. Nothing wrong with that. I love that. I do these trades all the time. Love it. But what happens when this binary expires? That's all I could make. And the market just goes, boom. I could have made a lot on the spread, right? Okay, so I'm not trying to dog binaries or dog spreads one way or the other. I'm showing you there's a couple things to look at. All right, my point is, if a market moves up 10 pips, maybe you won your binary. Let's say you risked $80 on the binary for a $20 reward. Okay, you'd only made 10 bucks on that spread. So you think the binary is better, right? Well, how many spreads could you have gotten for the same risk? Okay, so you have to compare your risk and reward. So yes, I always suggest that new traders or those with small accounts start with spreads. For one, it's less risk. For two, well, it's less risk if you manage it and get out if it's going against you. For two, you could potentially make more on those big runs. But for three, you mimic the market tick for tick. It really helps you learn how to follow the market and mimic the market. All right. If you're gonna do binaries, use good risk management. Don't be going and buying crazy binaries just because you like the price. Don't be going and buying tons and tons of them. Maybe limit yourself, to one contract per $1,000 in your account. If you got $1,000 in your account, maybe don't do more than one binary contract at a time. If you got $1,000 in your account, don't be buying 5 $85 binaries at a time. You know what I mean? Don't be doing that. So again, this is not me trying to sell you one way or the other on binaries or spreads. It's me showing you the differences, okay? But, if you've got a smaller account, if you're under $1,000, under $500, I'm going to tell you to go with spreads, all right? That's what would be my personal preference, but it's also figuring out which one you want to go with is your personal preference. Go on the Apex website and look at those places I showed you where you can see some of the different spread strategies and systems, see some of the different binary systems, see which one you're more comfortable with, which one fits your particular trading style. What are you more comfortable with and familiar with, spreads or binaries? What's your account size? What's your risk tolerance? What's your experience? What's your trading schedule? If you're full-time and you can sit in front of a computer all day, maybe a little bit longer term spreads or whatever are great for you. If you're very part-time, maybe you really want to take advantage of those 5 and 20-minute binaries, all right? Figure out which strategy or system you like, what's best for you, and compare the different ones. Take advantage of that free education I showed you. Again, hop on over to apexinvesting.com, and again, under Binary Essentials, number 3, you can check out all the different binary courses, okay? Under the Apex room here, number 3, iZone Sharpshooter. Look at some spreads and some spread info there. If you have any questions at all, you can hit us up over on the online chat here, or the best place is right here under the question. You can ask questions in the forum, or right here you can submit a help desk ticket. If you have questions about binaries or spreads or certain systems, or which videos you should watch and so on, but check those out. Take advantage of, like I said, the free demo account that Nadex will give you, some of the free education here. I'm just looking over a couple questions. Yeah, some of y'all are asking some question about the charts and patterns and how all that works. Hit us up over on the Apex website. We can get those questions answered for you there. This is more of a Nadex education webinar here. Can't really get into a lot of that, but hit us up over there and we can help you with that. Susan, no, we have not released the new Iron Condor training just yet. We will make an announcement on when and where that will be posted within the next week or two here, but it'll be everywhere. Trust me, you'll know, you won't miss it. So let's see. I think I've got most of the questions. I hope that helped a little bit tonight, guys. Again, that was pretty basic stuff we covered there. Just wanted to review the basics of binaries, basics of spreads. A lot of you have been asking, hey, I listened to one webinar and you showed me this awesome binary system and I go and I want to use that. But then I hear this spread thing you do and now I want to jump and try that. Choose one. Don't be jumping all over. Start with one. Start with either binary or spreads. Go through the different free trainings available to see, you know, which one of the strategy or system you like the most that best fits your needs. Pick that one system. So pick binaries or spreads, pick one system, study it, learn it, master it, hop right in demo, start demo trading it. You don't need to be watching videos for 2 years and watching 10 different systems for 3 years and back testing that. Pick binary spreads, pick a system, watch the videos again, hop in the demo and start trading it. That's the best thing you can do as opposed to jumping all over the place, okay? Jeff said, this is my first webinar. Thanks, very helpful. Good, Jeff, glad to have you. Glad to have you on board. Again, Jeff, check out that under the questions tab here, trading questions forum. Go down there to watch webinars. And again, it's broken down into spread webinars, binary webinars. Get some good information in there. There's ones, you know, called the ins and outs of spreads, like I showed you. There's binaries 101 if you want to get some more of the basics and stuff like that. But again, pick one, start with it, master it, demo it. Don't be all over the place. What you'll find yourself doing is 2 years from now, you'll be on another webinar with me saying, hey, I'm still watching videos and it's great. I'm learning so much. I'm trying to learn it all. You don't need to know everything in order to do anything, okay? You got to start somewhere, get it going, and then you can add on from there. So, all right, guys, I'm going to shut it down now. We've gone over a little bit here. I really appreciate you being on with us, and make sure to join us every single Monday night from every Monday night at 7 p.m. Eastern time, and keep an eye on our webinar calendar right here. If you click this weekly webinar calendar, you'll see the Monday night webinars here, okay, with Nadex. Feel free to join us on those. We also normally do some webinars on Thursdays as well. You're welcome to join us on, and we do some radio shows during the week. So again, make sure to hop on over to apexinvesting.com, create a free username and password, check out that education, sign up for some upcoming webinars. Like I told you earlier, hop on over to facebook.com/apexinvesting. Like us on Facebook, follow us on Facebook. Like I said, some good information there, upcoming webinars, new promotional events. Once I have the webinar recording up tonight, I'll post an event on Facebook as well, so you'll know when this is up, and so that way you can come back in and rewatch it if you'd like. So, okay, I sure appreciate it, guys. Everybody have a good evening, and we will see you in the trade rooms or in the help desk. We can help you with anything. Otherwise, next Monday night at 7 p.m. Eastern. All right, thank you. You're very welcome. I appreciate it. Thanks for taking the time. You too, Phyllis. No problem. Thank you very much.